So today I want to talk about remaining neutral and adaptable, um, and why it helps when it does come to trading. Because I feel like when you are adaptable and you keep your mind frame in a neutral state, you're able to see the market for what it's actually showing to you. So this was a trade I took quite a while ago. So it was the end of May, and I was holding it for quite a while. It was more of a swing position. So I entered around this area, and I was looking for longs. So essentially looking at this as a higher low for the market to then eventually create a higher high. So at this point the market was moving great. So we got a move up, high, low, these lows held, looking for the same thing to happen again. So we got high, and then we're looking for a higher low, so for these lows to potentially hold or be broken, and then we get a move up to the upside. However, as the market developed, we got a shift. So entering into the trade, the market was, and holding the trade, it was looking good. So you got move up, low, high, low. However, at this point I could see the market had struggled to take out these highs, so broke these highs, retraced, even failed to take out these highs. So the market moved very close to these highs but still struggled to take it out, and we started to get a move lower, and we did break these lows with quite a bit of a momentum, and got a sideways range and then dropped lower. However, I didn't take a full 1% loss on this trade. I essentially got out around this area. I was looking to get out at around break even, but because I was holding the trade for quite a long time, the swaps was a bit disgusting on FTMO. So yeah, what allowed me to get out of the position quite early is remain the neutral, and from this point, when we did break these lows with momentum, I was kind of looking to see how the market reacts, because this could be the market taking out these lows and rejection, and we move to the upside, and the trend is overall still intact. But when I zoom in, you can see these highs have been taken out, and we started to get that commitment to the downside. So yeah, I was out of the trade. But I want to talk about two biases that I essentially had overcome to see the markets in this way. So the first bias is the anchoring bias, and this is relying heavily on the first piece of information. So in this scenario, the first piece of information would have been, I would say, this here. So understanding that the market has been trending, and looking at my overall first entry point, which is here, and sticking to this piece of information and completely not even perceiving this information, because I'm so locked in on what's going on here that I'm forgetting what's going on here. Well, I'm not looking at what's going on here. So first piece of information had indicated bullish price action, and if I had stuck with that piece of information in my mind, I would have been able to see what the market had been showing me a bit later on as the market and as price developed. The second bias which I had to overcome was confirmation bias. So this is interpreting information in a way that's congruent with my original belief. So my original belief was that the market is likely to head up higher. So if I had confirmation bias, I would have still likely held on to the position, because no matter what the market is doing, every single piece of information would have been in line and congruent with me and my belief that the market is likely to go up. So again, at this point, high, low, high, low. However, if I had confirmation bias, I wouldn't have been able to see this strong displacement to the downside and this kind of continuation. I wouldn't have seen that, because I would have been thinking so heavily on this piece of information, and again here, that whatever was happening here I wouldn't have been able to interpret, and that would have been detrimental to me. I would have likely taken a whole 1% loss, or might have even removed my stop and been like, nah, price is likely to continue heading up higher. But I didn't. So going on to the drawbacks, so you cannot see the market for what it's actually showing you if you have these two biases. If you're acting off of these two biases, you cannot see what the market is actually showing you, and you need to be always remaining fluid, and because the market is fluid, so you need to kind of alter your mind in a way where it's congruent with how the market moves, and the market can move anyway, anyhow, at any time. So you can potentially miss out on position in the opposing direction. So if I take away this here, so at this point I was looking for the market to continue trending, so for the market to continue creating a higher high. However, we broke these lows and we formed this correction here. So this wasn't really an entry for me, but if you're someone that's more aggressive, you could have potentially got involved in a short, and then that would have been a nice profit for you. But for me, that's a bit more aggressive, because the trend hasn't fully yet changed, but we have started to get a bit of momentum to the downside. So you could have got involved in that, exited the first position, and then entered on this, and got involved in shorts. However, if you did have these biases, you wouldn't have been able to see that. And another drawback is you're holding on to losers for a bit too long. You will see the market in the way you want to see it, not what the market's actually showing to you. So if you're looking for longs and you're stuck on the market has to go up, you might move your stop, because you're now thinking at any point this is going to go up. You know for a fact it's going to go up. Like, there's no probabilities, there's no element of chance in the way you're thinking. You're like, I have this bias, this is what it's doing, and that's it. And these can be detrimental to your trading and your trading decisions when you have these biases. There's other biases which influence your decisions, but these two biases are very, 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 very vital in trading, and you need to overcome these biases in order to see the market for the way it actually is. That's it, man.